Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, we will be reviewing Nigeria's first quarter 2023 capital importation numbers recently published by the National Bureau of Statistics. Capital importation remains essential to the economic growth of a country through creating FX liquidity, financing businesses, and generating employment opportunities. The investors themselves seek to increase their returns and diversify their risks. Capital importation is grouped into three: foreign direct investment, which is an investment made by a firm or individual in one country into business interests located in another country; foreign portfolio investment, which is the purchase of securities and other financial assets by investors from another country; and other investments, which is mainly trade credit, loans, and currency deposits. A certificate of capital importation (CCI) is issued within 24 to 48 hours by a Nigerian bank to the foreign investor for an inflow of foreign capital, either in form of a loan or equity or goods. The primary purpose of the CCI is to guarantee access to the official foreign exchange market for repatriations of capital and returns on investment, dividend, interest, and capital on divestment. This simply means that when the CBN knows that a foreign investor officially brought in money into the country for investment purposes, the CBN would also provide USD for their exit. The total value of capital importation into Nigeria in Q1 2023 settled at $1.1 billion, a 6.8% quarter-on-quarter increase relative to Q4 2022, and a 28% year-on-year decline compared to Q1 2022. A further breakdown shows that the foreign portfolio investment (FPI) accounted for most of the capital importation in Q1 2023 at 57.3% versus 60.9% in Q1 2022 and 26.9% in Q4 2022. Total FPI moderated to $648.3 million in Q1 2023, down from 32.2% year-on-year from $957.6 million in Q1 2022. The decline can be attributed to the lack of clarity in the FX environment and the uncertainty around the general elections. However, FPI was higher by 127.6% from $285.3 million in Q4 2022. Still on FPI, investment in bonds accounted for 46% of total FPI in Q1 2023. It's noteworthy to highlight the significant inflow to equity, increase of 4,472.02% quarter-on-quarter to $222.3 million in Q1 2023 from $56.6 million in Q4 2022, accounting for 34% of total FPI. The inflow from other investments dipped by 34.8% quarter-on-quarter from $665.6 million in Q4 2022 to $435.8 million in Q1 2023. Loans accounted for 99.6% of other investments. Loans are mostly advancements by a foreign parent company to subsidiaries or foreign investment in Nigerian companies in the form of debt. Foreign direct investment, which is more long-term in nature, sustained its descending trend, down by 69.3% year-on-year and 45.5% quarter-on-quarter from $155 million in Q1 2022 and $84.2 million in Q4 2022 to $47.6 million, the lowest since 2013, in Q1 2023. Despite the huge consumer market, Nigeria continually fails to attract FDIs due to its unattractive business environment. Unfortunately, FDI, which is the most productive segment of capital importation, has continued to thin out. By sector, investment in the banking sector topped with a proportion of 26.9% of total capital imported in Q1 2023. This was followed by production, IT services and financing with 22.6%, 19.1% and 10.5% proportions respectively. As assessment of Nigeria's capital importation by source shows that the UK continues to take the lead, accounting for 59.5% or $673.6 million of total capital importation. This was trailed by the United Arab Emirates 9.6%, the US 8.4%, South Africa 8.0%, and Singapore 6.2%. By state, Lagos still ranked the highest in Q1 2023 with a significant 62.2% share of total capital importation, followed by FCT with 36.2%. This implies that Lagos and Abuja accounted for 98.5% of total capital importation in Nigeria. By banks, Citibank Nigeria Limited 37.6%, Standard Chartered 31.8%, and Stanbic 13.4%, all accounted for 82.7% of top capital importation. Looking forward, we expect the new FX policies, especially the unification of the FX, if sustained, will boost capital inflow in Q2 2023, specifically foreign portfolio investments. To reverse the downward trends in FDIs, there is a need to provide an enabling environment and regulations that protect foreign direct investors and their investments in Nigeria. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 07082463747. Stay blessed.